Hi, welcome to Symax Fintech Weekly Report. This is for 27th of June, and hopefully it's going to set your week up for you, and it's a good one. So first of all, our disclaimer, very simple. Trading does involve the risk of loss of capital, and it's not suitable for everyone. And as I say every week, but I hope it is for you. And as many companies provide leverage, just be aware that you can lose substantially more than your initial investment. The views, opinions, everything else contained in here actually are mine, Chris Tubby, and they're provided solely for educational purposes. We are not encouraging you to invest, giving you advice, or encouraging you to trade at all. Actually, it's got to be your decision, and of course, make sure that you're ready first. And of course, to that, you should carefully consider the risks, your financial situation, definitely your level of experience and your risk appetite. And you should only risk capital you are prepared, but more importantly, you can afford to lose. If you've got any doubts whatsoever, seek independent financial advice before you start risking your capital. Okay, so let's take a look back at last week. So Powell's testimony, unconditional, his key objective to defeat inflation. Again, markets are nervous because how far is he going to push interest rates to achieve this? And at the end of the day, he's not going to be able to do it himself because a lot of the issues are on the supply side. But what he's trying to do is control the demand. In the UK, the economy is weaker. The government lost local elections. We've had strikes in the UK, so things aren't looking too rosy there. Although saying that, the pound's holding up better than I would have expected. Macron's already lost his majority in France. There was some elections going on there, and that's put him in sort of a vulnerable position. It's going to make it much more difficult for him to push things through in France. And it's also going to probably damage his sort of standing in the EU slightly, just because he's weakened himself within the French community. Ukraine's application to join the EU has been accepted, so they've got candidate status. However, this could take years to become a member unless the EU decide to fast track it. Of course, if this does happen, the fact that this is happening, it does concern me a little bit because it could mean that Putin escalates his assault on Ukraine to obviously try and take over the whole country before they could become a member. And of course, the other thing is if they do manage to become a member before he manages to get the Ukraine, if he manages to get it, then that could drag the EU, and then potentially we could be on track for World War III. But let's wait and see. Fingers crossed not. German IFO came out, it dropped, but that's business sentiment, and Germany is close to stagflation at the moment. And the PMIs in the Eurozone were weak as well. So just a little bit on some of the contracts. So gold was pretty much in the $35 range, and it closed the week on the lows at 18.15. The yen's the weakest it's been for 24 years just because they don't look as though they're actually going to do anything. They're not going to try and hold it anymore. They're not going to try and do anything to their economy or put rates above zero at the moment. So we'll just have to wait and see there. Are they prepared to let it keep getting weaker? On that level, the dollar was pretty much flat last week, even after Powell's testimony. It fluctuated a little bit, but nothing dramatic. Oil dropped from 118 down to 101, but then towards the end of the week, it did firm up, and on Friday, it closed around about 107. That's WTI. Stock steadied all week, and they finished strong on Friday. The home sales data was better than expected, which is surprising considering obviously that rates are going up and they're above 6% for mortgages in the US now. And BTC held around about 20,000. Bitcoin miners have been selling. There's a lot of fundamentals going on. But, the good thing is it has been to a degree, loosely tracking what the stocks do. And of course, they had a better week. So maybe that just did hold it that little bit more. Looking on to this week, so we're coming up to the end of the second quarter, halfway through the year. There's some rebalancing going on, and this coming week we've got plenty of data coming out, lots of central bank speakers. A reminder, no NFP this week, it's the following week. So in the EU, we've got consumer confidence, CPI, retail sales, GDP, industrial production, and PMI. Obviously, the GDP won't be the final yet because we've still got a few days to go. In the US, again, lots of data, durable goods, trade balance, house prices. Again, good one to focus on at the moment. Are people still committing to those big expenses or not? Manufacturing, consumer confidence, CPI, and just again, another reminder, NFP is going to be out on the 8th this time round. Now, consumer confidence, I just want to say to you, I like consumer confidence because, we account for up to 70% of an economy. And, if we stop spending, if we can't afford to spend, then that's going to impact that economy quite badly. And that is going to dent demand. So, just bear that in mind. I don't think people take enough focus on consumer confidence. For me, it's one of my key sort of pieces of data that I like to look at. In the UK, we've got GDP, again, more house price data coming out, and consumer credit. And again, with consumer credit, are there more people taking on debt? Are they running out of money? Low, medium, sort of mid earners, that may be the case. And then sort of going out towards Asia, in Japan, they've got industrial production, CPI employment, China, PMI and manufacturing, Australia, retail sales. So some good stuff coming out that should make everybody happy. As usual, I do a little bit of a macro outlook. We've still got that inflation. It's either at or near the highs. And that's despite commodities dropping. Some commodities, that is, not everything. And of course, if commodities come down, surely costs should come down. Surely prices should come down. Or are companies just going to continue to take that extra money for themselves and not pass on those savings? Shrinkflation, stagflation, recession, they're all on everybody's lips. They're all on everybody's focus. It doesn't mean that they're just round the corner right now, but by possibly the end of this year or early next year, we're going to have a very strong idea of how bad things could get with all these rate increases. Supply chain issues still remain. China's still got some lockdowns. They're stop and start at the moment. We've still got these supply issues. Russian invasion of Ukraine's entering its 4th month. There just doesn't seem to be any end to that for the moment. Now that they've sort of, as I say, got this sort of potential start of their process to join the EU, I think, Putin is going to make a move for sure. Of course, just my opinion, guys. Energy and food prices have been still just maintaining, increasing in some countries, stabilizing in others, but not really coming lower. We still see that lack of workers. Earnings pressure again remains, just because companies can't attract enough staff. I'll come on to that in a moment. And US midterm elections are nearing, it's November, but, we're coming into July, so they're not that far away. And if they really struggle, the public's not going to take that laying down. They're going to hurt Biden in the November elections, I reckon. Which, again, could be one of those situations where he loses his majorities. Now, as I was saying, with earnings pressures and the lack of workers, airlines, they're having to cancel hundreds, if not thousands, of flights just because they've got staff shortages, whether it's from COVID, people not wanting to go back to work for them or whatever. It's just not happening. So again, where you thought that everybody wants to travel, which they do now, it's causing problems. There's so many flights being cancelled, which is, really impacting the public because, they've got holidays booked, they've got travel booked, and a lot of people are struggling. And you see these pictures of just luggage everywhere in the airports. It's just stacked up like mountains. COVID infections are increasing again in Europe, and central banks, I've got to ask, are they the cause or the solution these days? They add all this money into the system. They help to create some of this inflation. Look at the US. I mean, they put the Fed put in over $5 trillion into the economy, and they're ultra aggressive when they do their quantitative easing. And they're very passive when they do the tightening. For me, they should be selling out their assets more aggressively. They should be doing lots more of that rather than just trying to push interest rates up higher and higher. They need to drain money from the economy, not just from people's pockets. So trading tip of the week, it's a technical analysis one. False breakout. So, I don't know if you're into analysis. I always use candlesticks because most people do, although I use some other types of charts as well. And this is about when a support or a resistance line is broken. So, if we look there, we've got this nice support that's been set up. But, after we've just established that triple bottom there, we get a false breakout. And that's where that level was broken. But it was broken very briefly. Now, this can catch traders out, especially if they're using candlesticks because of this. And we call it a false breakout because it flushes some of the longs out the market. And then, of course, the market turns very quickly and closes above the line or on the line. And that's an important thing, where it closes. And then the market will quite often from there would have a strong move to reinforce that rejection. And as you can see there, that's exactly what happened, which is obviously why I used it as an example. So, just a little bit of an insight. We'll try and give you a little tip each week just again to give you a little bit more knowledge and insight into trading. So now we're going to move on to technical analysis. First of all, we're going to look at the Dow Jones as usual. So the Dow rejected the 0.382 fib level. It bounced off of there quite nicely. The stocks potentially have gone into this negative trend, this downtrend. However, saying that, last week was an up week. So, is this going to be a dead cat bounce where we get the sellers coming back into the market? Or is this just, the rejection level where they start to go up and, investors now feel more comfortable. They know what the Fed's doing. They know what central banks doing. Yes, there's fears of inflation. Yes, there's fears of recession. But are they comfortable still taking that risk on for the moment? Now, to prove that on the upside, I think that the chart here shows that we need to break 31523 on the Dow. So again, as usual, we're just going to have to wait and see what Monday brings us there. The S&P has filled the small gap that there was, which was on the left, and now it's sort of closed above that as well. So again, all the stocks just follow each other, really, don't they? Lots of them are connected anyway. So when we look at the S&P 30-minute, we can see that it's again going to test the upside. Is it going to do it this week? Yeah, with central bank speakers and such like. But of course, we haven't got NFP this week to make sure that there's a boost or that sell off again. So again, support and resistance are in there just for you to help you with those levels. Just a reminder, the blue lines, the blue lines themselves don't really have any meaning. It's where they cut through the trend lines. So all it's doing is those blue numbers on the right hand side, it's just giving you the actual levels where those lines actually cut across the trend. When you've got the horizontal lines in that sort of maroon color, yes, they're proper sort of just horizontal support or resistance lines. Again, just levels just to sort of try and give you a little bit of help for next week. This is the NASDAQ on the 30-minute. again, not much to say there. It's just going to depend on whether the stocks can carry on from their good performance last week, or whether we're going to see the sellers come back in. It's pretty much inflation, recession versus just investing at the moment. Is there anything else to invest in? That's going to be the big question.